I think tax regulation and trade, we believe we can get to 3% sustained economic growth. That's going to take us some time, but that's our objective, and that's what we believe we can get to. And that creates lots of opportunities for Americans.
That was Treasury Secretary Steven Mnuchin telling me exclusively this week on Mornings with Maria here on the Fox Business Network that the Trump tax plan will ignite the economy. That plan lowers the corporate tax rate severely. It would likely impact companies small and big and prompt some, like Apple, to bring money back from overseas. Apple, of course, disclosing that it has a stunning $256 billion in cash on hand overseas. I'm back right now with Nasdaq CEO Adena Friedman. And Adena, your thoughts on the Trump tax proposal and its impact?
Sure. Well, we definitely are a supporter of lowering corporate income tax and managing through the repatriation of cash for companies, because we do think that'll give them more ammunition to be able to grow their businesses and expand what they do, and we do think it would be a growth driver for them. But in addition to all the corporate tax issues, we see some very specific areas of tax reform that we'd like to see in small businesses to give them better access to deductions and tax breaks associated with being a public company, because a lot of the small businesses have certain deductions that really only help them as private companies. We'd like to see that expanded to the public markets, in addition to providing investors better abilities to manage in their investments without heavy taxation. So we have two things that we've been looking at, both in terms of just deductibility of dividends and making sure that they don't have to get double taxed on dividend payments, in addition to potentially trying to create an investment account that would have a much lower tax rate on the assets in the account, but not subject them to capital gains tax. So we have a lot that we think in our blueprint that I mentioned earlier that we think that will really be beneficial to the markets and to the economy.
Now I want to walk through the blueprint, because this is important, and you have, obviously, you're one of the leaders in the global market, so the onus is on you to come up with recommendations and ideas. Walk us through the most important parts of that blueprint. Yeah,
Nasdaq really does play a very special role in the U.S. economy, and it's something that we really take very seriously and we're very passionate about. It's really, frankly, one of the main reasons I've been here for over 20 years is just the passion we have about how important the capital markets are for growth and job creation in the United States. And the concerns that we've been seeing, as I mentioned before, is this lowering, the lower number of public companies, the fact that companies are wanting to stay private longer, or frankly avoid the public markets altogether, have made us really sit down and think, what are all of the things that need to change in order to make the capital markets more vibrant and more inviting for companies? So tax reform is one, litigation reform is another, and there are certain legislations already on the table that would help with litigation reform that we are highly supportive of. Looking at regulations and disclosure obligations. Politically motivated disclosures for public companies. Why? You know, it should be that disclosures are really focused on financial performance, business performance, strategic performance, and frankly, leave all that other noise out. Proxy reform. If a company wants to, if an investor wants to have a say in the governance of a company, should they only have to own $2,000 worth of stock, or should they be a substantial owner in the stock? Things like that. So we have a whole range, as well as market structure. We look at the market structure right now as a one-size-fits-all model, whether you are Apple and Google or whether you're a $100 million company. And we do think that there's a reason to create a different market structure for smaller businesses and smaller stocks that allow for liquidity to be more concentrated. So we have a range of things in this blueprint. We want it to be a dialogue. We do think there's certain things that can happen now, and other things where we will want to engage with the industry and with Washington to make them happen.
Yeah, I think you make all really important points, because your recommendations and ideas are important for not just the U.S. market, but the global markets.
They are.
In terms of the tax plan coming out of the Trump administration, a 15% rate for a business, obviously small owned and operated business, seems like a really big deal to me. I mean, these companies were paying 39.6%. Now they're going to be paying 15%. Even a 15% or a 20% corporate tax rate, down from 35%. Do you think this will be a catalyst for these companies to actually use that money that they're saving to create jobs and invest in their businesses?
I'm absolutely, wholeheartedly agree with that. I think that if you think about where job creation has come from in this country over the last 100 years, and certainly in the last, the last 20 years, it's been from small to medium-sized companies that have grown and created jobs for people all over the country. And these are the companies that really are the underpinning of our economy. And it's why, actually, we've been so successful, is because we do provide such a great ecosystem for entrepreneurs to succeed. But then if you tax them heavily, you're automatically draining cash out of their coffers that they could use to grow their business. So a lower tax rate, especially for small to medium-sized companies, but frankly overall, will, I think, be a huge catalyst for job creation.
The other thing is, what Secretary Mnuchin was talking about was the potential for a 10% rate for that repatriation. I mean, if you're talking about a company bringing these trillions of dollars from overseas here and seeing a rate to do so down from 35% to 10 or 12%, that's got to be a big encouragement to bring the money back.
I think that it would certainly be a big encouragement to bring the money back. We have to realize that we are incredibly fortunate as an economy that we are the place that the whole world goes to look at as to the beacon of great capital markets and, frankly, at a great economy. But we tax our companies more than almost any other country in the world. So we really are not really encouraging businesses to grow and expand. And over time, that's going to make it so that we diminish our role in the global economy. So all of these things, I think, are really important for catalyzing growth.